Welcome back to Policy Bazaar. I'm Arjun Bhagat, and with me is Anjla Dheer, Director at Policy Bazaar, and she's answering your questions. The first question is from Shri Devi, who's 60 years old and wants advice on the health insurance options for a 62-year-old. Anjla, please.
Basically, once you've crossed 60, the options are becomes limited, and more so if you have certain pre-existing diseases, and there are certain limitations also, because even if you get an insurance cover, there could be co-payment option, which means that certain amount you would have to pay for any claim, certain amount you would have to pay. There could be waiting period for certain diseases. You could look at Star Health Red Carpet, which is a senior citizen plan for people above 60. It gives you an option of lifetime renewal, and the co-payment option for pre-existing diseases is 50%, and for normal diseases is 30%.
So I guess the advantage of buying a health insurance early is that the health insurer cannot deny you a health insurance plan once you become a senior citizen. Is that
absolutely right, Arjun? So once you have a basic plan and once you become a senior citizen, the health insurer cannot deny you the plan, and even if you have a disease which it gets covered in the plan which is there.
So there are advantages of starting early.
Absolutely.
Right. So we've got Saurabh, and he says, I have an active medical insurance plan and I want to know if it makes sense for me to enhance it with critical illness plan, and he wants to know which is a better plan on this front.
Saurabh, you haven't mentioned, basically what is the basic cover. So you basically need to make sure that you have a basic cover of 5 lakhs at least, and on top of it, you can look at enhancing your sum insured by taking super top-up plans, which could be L&T, which could be Apollo Munich or Religare super top-up plans. And on top of it, you could look at some critical illness riders or specific plans as well, like HDFC Cancer Care or critical illness riders with any of the plans which you choose.
So there's a wide option there. We've got Rajat, and he asks, please recommend an insurance plan and an add-on cover for a 2.5-year-old car, and he would like to look at a comprehensive motor policy.
Basically, you should look at a comprehensive motor policy. Since you are saying that you're mentioning that your car is 2.5 years old, you should look at a zero dep cover, which is given for cars which are there till 5 years. And you could also look at the option of engine protector, roadside assistance, and like I earlier mentioned, you should go for a zero depreciation cover. Engine protector also is a good option if there could be a problem to the engine, because during monsoons, etc., if you're in cities like Delhi and Mumbai.
Right, we've got Anupriya, she's 37 years old, and she asks, between individual health plans and the family floater plan, which is a better one for senior citizens? In fact, she says very senior citizens.
Okay, Anupriya, very good question. See, basically when you're wanting to buy a senior citizen plan and you want to choose between a normal plan or a floater plan, two things which you need to consider is, what is the age difference between the two partners, or what is the age difference between the members. Second thing is the medical history of the members. So if the age difference is very high, then the premium for a family floater plan is calculated on the basis of the age of on the higher age. So the premium becomes higher. So if there is a difference of more than 3 to 4 years, then you should not go for a family floater plan. It should be an individual plan. The second thing which you need to look at is, if all the members are healthy. If one of the members has some ailment, then there is a probability that either the policy can be denied, or there could be a high loading factor which could again which would have an impact on the premium for the entire policy. So keeping these two factors in mind, you should decide whether it should be a single plan or it should be a family floater plan.
Right, Anjla, thank you so much for joining us on Policy Bazaar. And now it's time to wrap up the show. But last week we asked you a question: what is deductible in health insurance? And the answer is the amount that you pay before your insurer pays the benefit. And the winner is Sameer Sengupta. Congratulations. Now, this week's question is, up to what extent FDI in insurance sector is allowed by the government of India? A, is it 26%? B, is it 49%? C, is it 51%? Or D, it is 100%? Now send in your entries to queries@policybazaar.com, and you can also send in your questions at queries@policybazaar.com. And thanks a lot once again, and we'll see you next time with another episode of Policy Bazaar. Goodbye.